If you buy Bitcoin in that ETF in Hong Kong, that Bitcoin is not being custodied in the United States. The Hong Kong financial system prefers the assets to be custodied at a regulated bank in Hong Kong. So if I'm a Hong Kong investor or a Hong Kong institution or Hong Kong company, I could funnel money into Bitcoin via the Hong Kong ETF. When the ETFs were approved in the US, there was a whole set of institutional investors like pension funds and hedge funds with $50 billion, $100 billion, $200 billion. They have a lot of capital, but they could only buy through the ETF.
Right.
Even if they wanted to work for a year to set up all these other systems, they're not allowed to. Their charters prohibit them. But if you buy $10 million of Bitcoin via an ETF in Shanghai, and the Bitcoin is then purchased by the exchange and custodied in China, the Chinese banking system benefits, the Chinese currency benefits, the Chinese culture benefits, the Chinese government gets their taxes, the Chinese investors get Bitcoin.
Welcome to our channel. Today, we're diving into the latest insights from Michael Saylor, CEO of MicroStrategy. Michael Saylor starts by highlighting the importance of Bitcoin ETF for institutional investors such as pension funds and hedge funds. These entities, managing vast sums of money, often face strict compliance regulations that prevent them from directly purchasing Bitcoin. ETF provide a compliant and regulated pathway for these institutions to gain exposure to Bitcoin without violating their investment charters. In the US, the approval of Bitcoin ETF marked a significant milestone, enabling large capital holders to invest in Bitcoin indirectly. However, this trend isn't confined to the US. It's spreading globally, with new ETF launching in various regions, including Hong Kong. Saylor explains that the introduction of Bitcoin ETF in Hong Kong is a game changer. When investors buy Bitcoin through a Hong Kong ETF, the Bitcoin is custodied within the Hong Kong financial system, benefiting local banks and the economy. This model could soon extend to mainland China, where ETF might be issued by Shanghai-based financial institutions, with Bitcoin custodied in Chinese banks. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
When the ETFs were approved in the US, there was a whole set of institutional investors like pension funds and hedge funds with $50 billion, $100 billion, $200 billion. They have a lot of capital, but they could only buy through the ETF.
Right.
Even if they wanted to work for a year to set up all these other systems, they're not allowed to. Their charters prohibit them. So they've got a compliance problem. And then what happened is an ETF launched in Hong Kong. Well, you can imagine if you buy Bitcoin in that ETF in Hong Kong, that Bitcoin is not being custodied in the United States. The Hong Kong financial system prefers the assets to be custodied at a regulated bank in Hong Kong. So if I'm a Hong Kong investor or a Hong Kong institution or Hong Kong company, I could funnel money into Bitcoin via the Hong Kong ETF. Now the rumor is that there'll be ETFs in mainland China. Those ETFs will come to you via a Shanghai-based financial institution, and the Bitcoin will be custodied in a Chinese mainland bank, maybe in Shanghai. There's 1.5 billion people in China that want to buy Bitcoin. The Chinese government doesn't have an objection to them getting rich. It doesn't have objection to China getting rich. They all like money.
Yep.
They all like wealth. Their objection is they don't want people to take more than $50,000 a year in capital outside of China.
Yes.
So if you buy $10 million of Bitcoin, put it in a hardware wallet, and leave the country, you violated the capital controls. But if you buy $10 million of Bitcoin via an ETF in Shanghai, and the Bitcoin is then purchased by the exchange and custodied in China, the Chinese banking system benefits, the Chinese currency benefits, the Chinese culture benefits, the Chinese government gets their taxes, the Chinese investors get Bitcoin. And so the real significance of the ETFs is they're solving the problem of credit access, compliance, accounting, convenience, reporting, and presumably there's going to be a different one in every city in the world or every country in the world. You know, if whatever nation, if the Saudis want Bitcoin to stay in Saudi Arabia, they'll have an ETF in Riyadh. The Emiratis will think, well, maybe we'll keep one in Dubai
So you
or Abu
think we're going
Dhabi.
to see that avalanche continue?
There's already 34.
Wow.
34 holding more than 1 million Bitcoin. So I think we'll keep seeing a spread. I think you'll see an ETF in every country. Like in Argentina, they don't want you to take capital out of the country.
Yep.
So the logical solution for them is an ETF where the Bitcoin is custodied in an Argentine bank. But as that happens, you see what's going on is when the Chinese buy billions of dollars of Bitcoin, they'll drive up the price of Bitcoin in New York. You know, ETFs are an application, companies on the Bitcoin standard are an application like MicroStrategy, and Cash App and Strike and other mobile apps, they're an application. And the crypto exchanges like Coinbase and Binance, they're an application. And eventually people will build it into their mutual funds, build it into their pension funds, build it into their insurance plans. More applications. Each application wants Bitcoin. Each application slurps the Bitcoin because they want capital, because we call it capitalism, because these are the capital markets. Every company needs capital. We build a civilization on capital. How much? $400 trillion of capital? There's $900 trillion of wealth in the world. At least half of it has to be pure economic energy or monetary premium. The world wants capital. Everybody needs it. Every government, every school, every institution, every charity, every religion, every family, every company, they all need capital, right? So Bitcoin will just spread as an asset to capitalize on. It is kind of the ultimate monetary union. It's a cooperative bank in cyberspace. Everybody that joins makes the network more powerful, drives up the value of their assets, and the more people that join, the more power they all have. Just like you have a union, if every worker in the country joins the union's pretty powerful. If nobody joins the union, there's no point in being in the union. It's like, here's the big idea. What if we created a union, but we put our money in it instead of our labor? It's not a labor union. It's a monetary union.
Saylor predicts that Bitcoin's integration into capital markets will continue to expand. As more applications, whether ETFs, mutual funds, or mobile apps adopt Bitcoin, its role as a cornerstone of digital finance will solidify. These diverse applications will drive demand for Bitcoin, fueling its growth and adoption across various sectors. He envisions a world where Bitcoin becomes an essential asset class, much like real estate or equities, used by institutions and individuals to store and grow their wealth. This widespread adoption will reinforce Bitcoin's position as a vital component of the modern financial landscape.
That Bitcoin adoption has been held back by misunderstanding of its true nature, because the industry has been collectively and colloquially called the cryptocurrency industry. So people's immediate reaction is it must therefore be a currency, and a currency is a medium of exchange, and they think of the euro and the dollar and the yen and the shekel and the whatever, and they think it's a currency, and their immediate reaction is, well, I know it's not legal tender, so it's tax inefficient to trade it, and I know it's not my government's favorite currency, and so it must be against the government, and it seems silly, and it's not stable, and it's volatile, and nothing's priced in it, so therefore I think it's stupid. or it's threatening. Now, if you step back and ask more deeply, what is Bitcoin? Well, Bitcoin is digital money. What is money? Money could be a store of value, a medium of exchange, or a unit of account, but the aspect of money that's a medium of exchange is currency. And the aspect of money that's a store of value is capital. More like property, but especially capital. Most people don't really think about a form of money and capital because we haven't really had a strong money as capital since the gold standard. The closest thing would be when you could hold gold as your capital asset and then you used notes or paper currency that was pegged to gold or some other currency as a medium of exchange. But if you think about Bitcoin as digital capital and you think about the dollar as currency, once you understand that, you see, well, currencies are medium exchanges, and the thing you need in a medium exchange is it needs to be legal tender because you need to be able to transfer it tax-free. And of course, the dollar is the world reserve currency, and then other countries will have their own currencies. There'll be the euro, the CNY, the peso, etc. Any country that's an effective nation state will have their own currency, and when the nation state is failing after a war, it may dollarize. It may, nation states will adopt the euro in lieu of their own currency when they can't support one, or they'll adopt the dollar, or they'll adopt CNY. And so there's 120 currencies, but there's 180 or more countries, right? So there's nothing exciting going on there right now, with the exception that people are creating digital currency in the form of stable coins like Tether or Circle, and in a country with a collapsing fiat currency like Argentina or
like
Turkey or Lebanon, you would prefer the digital currency stable coin because that dollar looks like a store of value to you. Right? If you actually converted 1 million pesos to $1 million 25 years ago, you now have 1 billion pesos. So it's perfectly fine as a capital asset and as a medium of exchange when your existing economy is collapsing. If your existing economy is not collapsing and you're in the European Union or the United States or a country where the currency is pegged to the dollar, in that case, you can just use your local currency as a medium of exchange. And then the issue is, what's your store of value? And if you talk to any wealthy person in any of those places, none of them will tell you the euro is the store of value. And they won't tell you the dollar is the store of value. Every rich person you meet is going to tell you that they own a portfolio of real estate or property assets, or they own company stocks, or perhaps they own scarce desirable art, or collectibles, or a sports team. They will own something which is probably scarce, desirable, appreciated. It will not be pure currency, and the majority of the money probably isn't in credit instruments or bonds either. They might occasionally sit in them, but most of their capital is invested in property assets or super high quality, collectibles or equities that they believe in, or their own private companies. Alternative assets even.
Saylor also touches on the role of digital currencies and stablecoins, particularly in regions with unstable fiat currencies. For example, in countries like Argentina or Lebanon, where local currencies are devaluing rapidly, stablecoins pegged to the dollar offer a more stable store of value and medium of exchange. This trend underscores the importance of digital assets in providing financial stability and security in volatile economic environments. As digital currencies gain traction, they complement Bitcoin's role, further integrating digital assets into the global financial system. Please like and subscribe my channel.